Hello, everybody. Can you hear me? Quick sound check and video check. Can you guys hear me fine? Perfect. Awesome. We'll give it a couple minutes. I appreciate everyone getting on here at on time. Um, you know, it's awesome. I see a lot of people turning in. People are just coming in right now. I'm just looking. Um, we will get going very, very shortly. So I appreciate your patience. Again, this is something that I figured I would do. It's been a little bit of time. I think the last time I did a YouTube live talking about markets was probably, I think June or something, right? So, I'm super excited, glad to do one of these again. And it's been a while. I mean, we're almost, in March, 2021. I can't, I gotta say it out loud to even comprehend it. But you know what? Life is pretty wild, right? So I appreciate everyone getting on. We're a minute from start time. I see the chat. Thank you, everyone, for confirming that you can hear and see me. I'm glad that there's no hiccups because I was worried that maybe I'm going to have some technical issues. So, you know what? I made sure everything was double checked. So, a couple more seconds and then we'll kick things off. The first thing, kind of the agenda for today, for those of you that are already here and waiting. Number one, I'm going to go over kind of the S&P 500, the index. As we can see, I have a clean chart. I don't have anything up on it as of right now. And once we've done that, we're going to go over and look at a few other asset classes. And then lastly, I'm going to go over what I think you should be looking at for some potential trade ideas. Some of them may be familiar to you, obviously. Maybe you have positions in them. And of course, our elite members may have already know about some of these and maybe have positions in them as well. With that said, let's kick things off. Thank you everyone for joining. I'm Riz with Riz International. Super excited to be here and get things kicked off so that you can benefit and have my insights on what I feel is going on with markets. And keep in mind that, as we continue, please hold off on some of the questions. I mean, you're free to discuss what you want in the chat room, but I will do a lightning Q&A round, rapid fire Q&A at the end. I'll try to get to as many questions as I can, and I'm going to try and keep this concise and brief and not drag the video on too long. All right, so here we are, the S&P 500. I hope everyone's here and kind of tucked in. And take a look at the index here. The S&P 500, for those of you that are new, is the 500 largest U.S.-based companies, right? It's an index, and how this is essentially the market as a whole. I know some people use the Dow, some people will look at the NASDAQ, and they're fine, that's fine, but the S&P 500 is the 500 largest companies based on market cap. It's a wide casting net, right? So it's a great index, a great benchmark to see how markets in the US are moving. And as we can see, I have simple candlestick charts here. We've had a tremendous run. I remember, in the March when this happened last year, I started doing some YouTube lives weekly to kind of keep people abreast of what's happening and kind of calm their nerves. And yeah, I remember doing it week by week, and things finally just started crumbling. And I said, you know what? I think this is a great entry point. Obviously, didn't get the bottom, and that's fine. And as you can see, since the March lows, all right, since the March lows, March 23rd, when the S&P 500 hit about 2,200, okay, to now, okay, even including the drop, the market, the S&P 500 index, the broader market, remember, individual stocks could have gone up way more, right? But ultimately, the market, the index as a whole, has gone up about 74%, including this week's drop, right? It's tremendous. It's tremendous, right? So it's crazy how things kind of move with this, and ultimately, you know what? I cannot believe the rally that we've had, and here we are. We're looking at things from a very very broader outlook. And I see people kind of panicking over what is really a 3.5% drop. Okay, it's a 3.5% drop since market highs, all-time highs. Right? Just give me a second. I got a little bit of an error here. Okay, fine. That's fine. Okay, well, I got a little bit of an error here on YouTube, but I hope everyone can hear me fine and see me fine. Ultimately, continuing on, this is just a 3.5% pullback, right? Just a 3.5% pullback in markets, and everyone is, kind of freaking out. Right. So ultimately, it just blows my mind. Right. It blows my mind that we are down only 3.5% after a tremendous rally. Right. Take a look at this. About 3.5% after a tremendous rally, and people are losing their minds. They're using the word crash. They're using the word correction. And a correction is healthy. And a correction is classified as a 10% drop from all-time highs. We're not there yet. Right. We're not there yet. And there's no fundamental reason yet for a crash. Okay, I know there's a lot of worries, there's a lot of fear, but doesn't mean that it's going to end up being a crash, right? So we have to get our expectations and look at the broader market. Do not miss the forest for the trees, as the saying goes. And I remember down here when companies had dropped 40% from their highs, okay, back in March 2020. People were like, yeah, it's still going to crash and it's going to go lower. I'm like, what do you want things to go to zero? Like, you want companies to go to $0 a share? You know what? Start scaling in. And I remember at these points, all these points that you see where these pullbacks happen, okay, small little pullbacks did occur, okay? People were like, this is the crash. This is the crash. Nope. We had a little bit of a pullback in January as well. Nope, not a crash, okay? So it's very important to understand what's going on here. All right, there's far too many people who've been, effectively just taking this opportunity to call it a crash when it isn't. Okay, give me 1 second. All right, I apologize. I have to make sure that you guys can actually hear me. I'm getting a YouTube error here. All right, sorry about that. With that said, let's continue on. Again, I apologize for the technical issues. Here's where we are, 38.11 on the index. Now, I'm going to map out some areas for you that you all should keep an eye on. Okay, there's not line in the sand. This is not precision. This is not precise. But it is something for you to keep an eye on. And these kind of areas here. So 37.60. Okay, just going to move this up a bit. 37.60. Give or take, is the area you want to watch in the index. Okay, you guys, price on the y-axis on the right-hand side. 37.60 is what you want to keep an eye on. All right, next, okay, you want to make sure that if markets do go lower, all right, it is possible. We had a very bearish day on Friday, right near the close. That is not very confidence inspiring. Another thing you want to do is keep an eye on the 3,700 area in the index, okay? So the market really, really likes to kind of hit support levels. And some people will look at support and resistance levels, not only as price areas, but also with moving averages. I've kept the chart clear and clean just for you guys. And 3,700 is what you want to watch, okay? Next. So if we get a break lower, you need to be prepared and aware. I'm not saying it will now, okay? I know there's going to be people who will misread and misinterpret what I'm saying, but I'm just drawing out areas where you should keep an eye. If we break below 37.60, all right, 37.60/37.50, keep an eye. We could go to 3,700. If we break below 3,700, then, well, you know what? We do have some downside room. So this is something you want to map out either on your charts or keep an eye or make note of, okay? Moving on, here is what is causing. People are thinking, what is causing this this kind of drop? And that's a reasonable question. Financial news media, they're all biased and they all have headlines and clicks that they need to kind of rope you in with. Ultimately, there is no one single reason why this drop is occurring, why this pullback is occurring. all we know is these pullbacks are healthy. They're an important part of market structure. Anytime you have something going like just parabolic, that's not healthy. That's not reality. Okay. I know there's a lot of new traders and a lot of people that are just used to buying something and it goes up 10, 20, 30, 50% even very quickly. That is not how markets work. That is not how most stocks trade most of the time. All right. So it's very important to check our expectations. What I would say is continue to buy slowly, but I'll get into my specific, I wouldn't want to say recommendations, but my personal thoughts and opinions on the matter. But what's causing it? A few things, a few key points. Number one, you've probably heard of the 10-year Treasury bond yield. Okay, I'm going to touch on that in a second. All right, let's take a look at the multi-asset class chart here. On the top left, I have the 10-year Treasury yield. Okay, so I'll cover this. What's been happening? You can see that bond yields have been coming down. Okay, when bond prices go up, yields go down. I'm not going to get into the explanation of it. This is what you need to know. When bond prices are going up, yields come down. What's been happening is over the last week, okay, as you can see, take a look at this curling up in the yield. Yield prices are going up. This is the return that bondholders make, okay, on the 10-year Treasury bond. Okay, when you have such a rapid, or I would say a very squeeze-like, very violent or rapid rally in the bond index or yield, that's going to spook people. Ultimately, what we need to realize is the yields went up to around 1.60, okay, 1.6% yield on the 10-year bond, and then kind of pulled back to about 1.45, all right? What does this mean? This means a few things. That people are worried that perhaps there is inflation creeping in. Remember, when you have inflation, okay, what does that mean? That erodes the value of money. Higher inflation is usually bearish for markets, okay? Remember, you have to think about correlation. So what 1.5% yield, give or take, is roughly, about a yield where we haven't really had, in quite a while, right? The last time we had this yield at 1.5 was February 2020. Okay, just before, markets really started to puke. All right, so this is the 1-year high for the yield prices, right? So for the yields, for the 10-year Treasury. So people are alarmed at the pace that it's increased, not just bond prices coming down and yields going up, but at the velocity that it's occurred. That is what is scaring people. All right. So ultimately, we've been here before. I remember, a year ago, 2 years ago, it was all about the, inverse yield curve and the yield curve going upside down and the 2-year dropping. And it just, the market has a wall of worries. Your job is to stay the course based on your time frame. And 2, based on your risk tolerance. You don't need to worry too much what the market and all these pundits and all these talking heads on CNBC, Bloomberg, Fox Business and blah, blah, blah are saying. You need to stay the course. If you hold high growth, overvalued, hype companies, and if the markets pull back, I assure you, those stocks will get decimated. And you can see that. I've gotten so many messages from people that have been holding all these kind of high, crazy growth stocks with no valuation justified. And they're like, well, all my stocks are tanking. Well, I wonder why. You know what? It's like you can't keep going to the buffet line and then when the food runs out, worry, why did it run out? Well, you've been going back for seconds, thirds, fourth, fifth, okay? It's going to run out. Okay, you can't keep going perpetually. So ultimately, people need to realize that they need to diversify, right? Make sure you have different companies, different stocks, but in different industries. Don't just have everything in tech or have everything in just pharma or have everything in just energy or have everything in just, electric, type of cars or renewables or solar or marijuana stocks, okay? So this is very critical. Moving on from Treasuries. Take a look at oil. Oil's been taking up the past few weeks, as we can see. $60 is my general kind of equilibrium price for oil, I've been saying, and we're right there. We're at about $61.50. I think this is a good level. We may see oil go a little bit higher once things start opening up, maybe demand comes back. But with that said, if we see demand come back in travel, commuting, okay, all these kind of things, oil price obviously has a chance to go up. But keep in mind that OPEC, the oil production countries, they're not gonna just sit by and say, you know what, well, that's fine. They're gonna increase production, okay, to kind of balance that out, okay, because they're dependent on offloading their oil to make money, to sustain their country's economics, right? So keep that in mind. If we see a sort of a increase in demand, we may see OPEC react, okay, and that can hopefully, I would say, continue to stabilize oil and not just kind of make it go violently swing in one way or the other. Next, gold. Take a look at gold, right? We had a massive rally in gold leading up to the middle of the year, 2020, because of inflation concerns, because of market crash concerns, because of an economic slowdown. So we know that ultimately gold was looked at as a safe haven asset. I'm not surprised at all that it's dropping. I haven't taken place, for transparency, I didn't take place in the gold rally, in the beginning of the year or at all. At last year. I also didn't buy any time around here either. So I do not currently hold any gold or metals directly currently, either via ETF or related gold metal companies like miners and all that. And you can see gold had a pretty bad Friday, kind of dropped, from nearly about 1780 down to about 1728. This is a pretty big bearish candle for gold. Moving on, the US dollar. This is the US dollar index. Okay, it's not the US dollar compared to the euro or US dollar compared to the Canadian dollar. This is the index. All major currencies compared to the US dollar. What we care about is where it's moving. Is it going up? And right now, the US dollar has gotten stronger on Friday, its close, relative to the other global currencies. Okay, so that's a quick recap of the markets. All right, different asset classes. Now, let's move into what a few couple things that just occurred since yesterday. You may have noticed, you may have known, maybe seen it on the news or headlines. The current U.S. administration and the House has accepted and agreed upon a stimulus bill, a COVID relief bill in the amount of $1.9 trillion with a T. Right? I mean, it's, it's another stimulus, another injection of capital into the system. And of course, part of this will go directly to the individuals, right? The individuals, wherever you are, if you're in the U.S., you're a U.S. citizen, you will probably be getting a check or a direct deposit, right? Similar to what people got last year. I think it was $2,000 or something. And then more recently, I think it was $600 or something like that. So ultimately, this is a little bit more money in people's pockets, plus, what the politicians have kind of agreed on what to spend on, what to pull back on. And ultimately, it's just politics. I don't get into politics, but this is a headline kind of news that the market has been waiting on since, I would say, the end of last year, right? They've been waiting on confirmation of another round of stimulus, and here we have it. So look for that to be baked into the price coming Monday's open, or even tomorrow's Sunday 6 p.m. Eastern futures open. Okay, lastly, what I have on the agenda before we get into Q&A and stuff, six stocks that I'm going to quickly run down. I'm not going to do a full analysis on fundamentals or technicals. I'm just going to bring them up on here on my screen, give you an idea of what's happening with the chart and my recommendations on it, right? And of course, the recommendations would be to potentially buy. Again, I'm not giving you financial advice. I'm not telling you what to buy, what to sell. This is something that I am providing you as my opinion. And of course, I put my money where my mouth is. So you can assume that I hold or will be taking a position in all these in the near future. The first one is Apple. Apple, tremendous company, fantastic company. Again, not a company that any of us are unfamiliar with, I hope. They've already had earnings and they're doing great so far. I feel like at this price, I had about a 120 target on this, and it happened a lot sooner than I expected. And here we are, very close to 120. I think this is a good entry point. Okay, this is a good entry point. I'm not saying, buy a full position on Apple right now. I think markets will continue to kind of pick up. I think this is a bit of an overreaction. Take these opportunities in the markets to scale in. Okay, if you need an explanation of scaling in, the simplest way I can say is if you need to buy $2,000 worth of stock, don't buy $2,000 worth of stock in this company or any company right away. Buy maybe $500, maybe buy $1,000. See where it goes. Then you can add the remaining 1,000, okay, later. All right, that's scaling in a nutshell, or averaging in. So Apple is one that I really like. In fact, I can tell you I have a position in Apple. And big shout out to my elite members, my elite trading team, the junior team, along with the support team. They're fantastic. Love you guys. And you know what? They're amazing. This stock is one that we in elite membership have spoken about, and I have a position. Another one, Walmart. Take a look at this. Walmart is a powerhouse. Okay, I know Amazon is the king of online purchases and pretty much buying whatever it is that you want. But Walmart is a close second. Okay, Walmart's not going anywhere. All right, probably not in our entire lifetimes. But here it is, tanking significantly from its highs. Okay, I'm not saying I would have bought at 150 or 153 per share, but take a look at this, down 15% from the highs. Okay, a great area. If you buy Walmart now, you're pretty much getting in where it was near August 2020. All right, another position that I have. Okay, money. Okay, I can tell you freely that I've actually added more to some of the positions that I have had that I've taken and over the last week. So I've continued to sort of scale in. Remember, I don't just double down or go all in. Okay, I do it strategically and methodically. Okay, so CRM is another one that I'm going to bring up. All right, here it is. Take a look at this bearish candle. All right, right on Friday they had earnings. The earnings were not the greatest, but guess what? Phenomenal company. Okay, great company. I really like it. Really like management. It's right around support, okay, area right now, about 215, and similar to Walmart, it's near the pricing of August. Okay, so you've gone back about 6 to 8 months where the price is. Okay, I think it's a great buy to scale in. Remember, caveat, disclaimer, this doesn't mean that because I'm telling you to consider it and buy it, that this thing is going to the moon or going up on Monday. No, it can continue to go a little bit lower, but that's fine. It's a probabilities game. All right, next on the list, this one is going to probably be a little bit of a shock. And one thing before I forget, CRM is not a position that I have yet, but I will most likely be entering, okay, for transparency. PLTR, Palantir, okay, this is a big data type of play. One thing I will say that many people may not notice is all these companies that I'm going to be mentioning and have mentioned, they're not in one sector. So Apple, you can say it's tech, right? But Walmart is not tech. Walmart is a consumer staple, consumer discretionary retailer, right? CRM is tech, but in a very different tech form compared to Apple, which is selling products and services. CRM is purely service-based and mostly for businesses, small and big, right? Palantir, this is the data company, big data company, and it doesn't service or provide services to you and me or any small businesses. It provides government contracts and large institutions. Okay, this company recently IPO'd. It's very rare for me to invest in or even buy a recent IPO, especially once it's kind of moved up 100, 200, sometimes 300%. But this area right now is me literally saying, wow, a great opportunity. In fact, I've bought a little bit up here and I've bought some more down here. I will continue to buy if it goes lower. Again, I have the capacity to do so. Another phenomenal company that I think you should take a look at. Keep in mind that it is a recent company, right? As you can see, it started trading on public markets at October. Okay, Palantir. Two more. This one's another one that I have not taken a position but will. I had earnings, okay, got absolutely slaughtered. And to me, I start getting excited when I see, stocks drop. Again, solid stocks. I'm not saying this is the most fundamentally sound company, but it is pretty decent, especially in the kind of environment that we're in. So this thing's down about 26% from, the highs, give or take, right? I really like it at this price. They're probably going to do, either scale in or take a starter position or enter this week. All right. So I'm giving you companies that I'm going to be entering this week or soon. And and kind of giving it to you for free, things that most people won't do, and being transparent about it. So I hope you appreciate it. I hope you're getting value and throughout this time, throughout this webinar or video, I should say. But keep in mind, this can go a little bit lower. Friday's candle looks pretty decent. It kind of recovered from the lows around 210. So keep an eye on this one. Okay, I like this company as well. Last but not least, Realty Income. This is a REIT, a real estate investment trust. This company pays dividends monthly. Okay, this pays dividends monthly, and the yield, the annualized yield on it is not too bad, about 4.6%. 4.5% you will make in a year if you entered now. You'll make 4.5% return just from dividends if you held for a year. Okay, that does not include any dividend increases that they do, or if the price appreciates. Okay, with that said, I really like it around $58. So about a couple dollars still to go. This Friday's candle isn't the most confidence inspiring, but please keep in mind they also had dividends, right? So when you receive dividends, sometimes the markets will extract a little bit of price action from the price of the stock because it paid out cash, right? But ultimately, this is a great company. It has some exposure to retail, which is not the greatest area, but ultimately it's diversified. This is one of the largest and most secure real estate investment trusts that you can buy and that I like. So that rounds out the 6 main companies that I think you should take a look at and perhaps consider for your trading or investment account. Keep in mind that you have to give these companies positions time. If you're looking for 6 more stocks, in fact, I did a video, just released it a few days ago on the 6 stocks that I purchased and have over $700,000 worth in. Okay, and you can look at it. I show proof of the actual positions as well. So to check out that video as well, it's on my page. Now, let's move into my favorite part. Okay, the part where I get to answer your questions. Again, I appreciate you guys staying here with me. Again, we're about a half an hour in. So let's get things started. Gonna go through the chat here. I just see a quick few mentions. I see Dropbox, someone mentioned Dropbox, Paycom, and Dash is solid. Yeah, okay, you know what? DBX, I actually, Dropbox. Not bring it. I have it on index, sorry. Okay, there you go, DBX. All right, pretty solid. I think this company is not really fairly valued. I think it's just been kind of put to the side in the whole data processing cloud storage area. So this thing has a good opportunity for future growth. I like it around this level. I do not currently have a position. Dash is also another one that someone mentioned. It's good, but I feel like it's a recent IPO that has dipped quite a bit. The Friday candle after earnings was crazy volatile. Went all the way down to 155 and then closed around 170. Okay, getting near its lows. Okay, this is something that it's okay if you really feel bullish on the kind of the food delivery area. Okay. Questions are coming in. Someone's asking me about Tesla. I got to touch on this. I apologize if I do miss a few of your questions. Just bear with me. Tesla, I do not have a position, but in one of the smaller challenge accounts, I took a very, very risky speculative put, and it did well. That's why I was able to grow the account in one way, because I took a put on Tesla earlier in the week, and then I closed it midweek. If I would have carried it, would have made more, but hey, it is what it is, right? I can't get in at the bottom or short it at the top and get out and take money at the exact bottom. I can't do that. So I took some money off the table in the middle of the week in the challenge account, but currently I have no position in Tesla, long or short. You know what? I would wait. I would wait if someone is looking at this from the buying side of things. I would wait at least till about, if it can get to 640. Let this drop, okay? Let this drop from the highs, which is about 25%, a significant pullback. But when you have a company that has gone up, okay, since start of 2020, it's, when you have a company that's gone up approximately, what is it, like, even after this pullback, 773%. Even after this pullback, it's up 773% in a span of a year and 3 months. I don't know. I'm not too crazy about getting in on this. I'm not too bullish on the stock, and I know there's Tesla diehards and people that love Elon and the stock. Either way, I don't have any. I would wait for this kind of drop to settle, and once it starts consolidating, then maybe you can get it. Wow, so many, so many questions. I'm gonna make it go faster. Okay, someone's asked me some redundant questions. I'm not gonna go over questions that are a bit redundant, but ultimately, cruise line stocks. Okay, RCL is one, Norwegian is another. This is a growing or like a comeback sector. Airlines. Airlines and cruise lines are a comeback sector that I think have some upside. Hotels have pretty much, recovered back to pre-pandemic level. Take a look at Marriott, right? And take a look at this, already back to pre-pandemic levels, right? I wouldn't be buying something like Marriott now. I know travel is coming back. I know hotels is coming back, but it's priced in for Marriott. The upside in airlines and, cruise lines is still there if you select the right ones. What are my thoughts on leap options versus stocks? Yes, leaps are fine. You just have to make sure that you have a conviction and the thesis to hold out. Thoughts on Unity. This is another one that I've done short puts on this. This is a great company that is a recent IPO, but I'm just kind of waiting for more price data. I'm waiting for it to kind of stop bleeding before I consider taking a long position. Okay, so I'm waiting it out right now from a technical standpoint. From the fundamental standpoint, it's a recent IPO. It doesn't really make any money. Obviously, it's in the gaming sector. Okay, something to keep an eye on. All right, someone's asking me, tech stocks got pummeled, as I mentioned, in the sell-off. Any chance for a solid recovery after Duster has settled? Okay, absolutely. Of course, it's going to recover. This is why I say, dabble in tech stocks once you see, the SPX kind of find a floor. Right now, it hasn't found a floor. Friday's early action was bullish, but then it just went completely the other side, and it's bearish near the end of the day close. So I would wait. I think the market could drop a couple hundred points in the S&P 500 index. Just my thoughts, but I don't care because I'll gladly take the opportunity to scale in and buy more of solid companies that I really like, and I like the valuations and the entries. Okay, moving on. AMD, MRK, PG. Obviously great. I have positions in all. Someone asked. So, I'm not going to rechart that. I'm not going to go over it. But yes. Someone's asking me, what do I think about covered calls on PLTR? Yes, I've already been doing that. Okay, you can assume that I use every single derivative and stock trading type of strategy or method to extract alpha from the market. Okay, I use both in a probabilistic way, in a way that I kind of suits me and is kind of indicative of my style. I don't just simply buy calls and puts, not often at all. So I am hedging. I am using covered calls and short puts and all that kind of stuff to grow my accounts and kind of be strategically in line with markets and my thesis. Someone's asking about the financial sector. So if you want to look at the financial sector, bring up XLF. Okay, financials have done really, really great, come back strongly, since the middle, I would say, really since the consolidation in the third quarter of 2020. I would keep this in mind. I'm not a buyer at these levels for financials. Again, there's all kinds of banks in here you could take a position in, but I'm personally avoiding financials. Someone's asked me, what are my thoughts on energy? Okay, energy sector is an interesting one. I have had a large position. If you've seen, my portfolio, and I have been, full disclosure, I have been winding down some of the large oil producers like Exxon and Royal Dutch Shell. I've been winding down, meaning I've been kind of scaling out, meaning selling slowly but strategically. Because I had large positions, I didn't just, get out all at once in a market order or a limit order. I get out slowly, okay? So I've been doing that. I think oil is still here. It's not going anywhere. I know there's a lot of hype with EV, renewables, solar, all that kind of stuff, which is fine. But as you can see, you know what? Big oil is still here, and it's been doing pretty well. It's one of the better sectors for 2021, right? So I'm not gonna say I'm strongly a buyer because I've already held these kind of companies for many years. I'm just kind of rotating out and making sure to diversify out of just oil and energy and oil. I want to move into other kinds of energy sectors, okay? Which is, something you have to do. You have to adapt, all right? Do I do more investing than trading? I do mix of both, right? Obviously, I do more trading because it's more active. It's a lot more in and out compared. But I don't day trade. I don't day trade. Day trading is a fool's errand for the most part. No one has any edge. All these scumbags trying to sell you day trading programs and day trading courses and day trading memberships, they're just shooting from the hip. They have no fucking clue what's gonna happen. No one does, but they're pretending like they do because they're looking at something that they think they have an edge when they don't. So I don't day trade. Increase the time frame a little bit. Swing trade and invest. Period. Okay, and make sure you do so sustainably. You can swing trade, but swing trade like a moron, and you're gonna lose money. You can invest, but invest in garbage, you're gonna lose money. Okay, period. Do I see any upside in defense stocks? Yes. You know what? Defense stocks have been kind of battered recently, and I've looked at them, and in fact, I have a position. No, I don't really have a position. I don't recall in any defense stock yet, but I have taken a position and gotten out recently, right? So Raytheon did really well, on I think it was like Tuesday or Wednesday, but then it pulled back after the markets just had a bad day. So this is looking like a good setup, consolidation, after a little bit of a rally. So keep an eye on this. I like Raytheon, I like Lockheed Martin as well for more longer term. I wouldn't buy these right now for a swing trade. The technicals and the kind of environment isn't conducive to buying these for a shorter term yet. Okay, I would wait for longer term. These companies are not going anywhere. Okay. Another thing, someone's asked me for let's see, hold on, they're moving really fast. Copper, oil, WPM, commodities exposure. So obviously copper has been on a nice rally. WPM I really like. It's a company that I have traded and invested in many times. And this is setting up for a good area. I'd look for the $34 mark on this thing to kind of wait and get in. Keep in mind earnings is coming. So that's a catalyst. It's a big catalyst, and we know earnings can go anywhere. So just be mindful of that. Okay, I do apologize if I missed some of your questions. I get a lot, and the stream is just kind of moving up every time I answer a question. I'm not going to cover like hype pump stocks. I'm not touching on Fubo and all that trash. Okay, I don't have the time or the inclination. I will not be touching on GameStop. I've talked about it enough. And ultimately, I really like some of the questions coming in here. Someone asked about Snow, a recent IPO, and someone also responded by saying wait for the lockup period, and I agree. This thing has come back down to earth after flying high, and in fact I told many people who were bullish on it and who were looking to get in, after it had a massive run up, I said I'm not a buyer. I think this is way overblown. Wait for it to come back down, and so far this is looking good. I would absolutely consider a position in the 240 area. Be mindful, again, big catalyst, second earnings release since they went public, and of course the IPO lockup is something to be aware of. That's when insiders can start selling their shares. So it happened with Palantir with Peter Thiel like offloading $500 million worth. That's not a confidence inspiring sign, but that doesn't necessarily mean the company is no good. Just keep that in mind. Okay. Also, nuclear. Simon asked about nuclear. Nuclear is a pretty much another resurgent sector. So nuclear has been around. The nuclear sector has been around. There's a few nuclear type of ETFs that you should perhaps consider. And one of the ways to play it is via uranium. Okay, and this is one of the companies that I have been looking for. Again, I don't have a position. It's a very, very tiny company. So I'm not saying go out there and buy a boatload. This is a very tiny company. I usually don't get in on such small cap companies, speculative. but I am looking at and continuing to do research into nuclear, uranium, and other forms of renewable energy. Okay, so this is an ongoing type of thing that I have to do. It's not like, oh, uranium, oh, nuclear. Let me just type it in and just buy these. No, I don't operate that simply, although sometimes it works for people that do it like that, but that's borderline gambling. Ultimately, I'm going to take a few more questions before I wrap it up. Again, we're at the 40-minute mark, so I don't want to go too long. Someone's asking me about NVAX. Okay, I already know what the answer to this is. I'm not buying it yet. This had a tremendous run. Obviously, direct COVID play, direct pure play on COVID vaccine stuff, but I'm not a fan. I think, you know what, like, you know, whether it's testing related stocks, whether it's COVID vaccine, whether it's COVID related medication stuff, like I'm staying away from all that. Anything that has a pure play COVID type of thesis, I'm staying away from. If there's something like Pfizer, as you know, I mentioned, you know, sneak peek for those that have watched the previous video, I love. Obviously, it's making the vaccine, but that's not their only thing. So I love companies that are large, have a portfolio of products and services, not just COVID, okay? So there's a few that only their entire business is operating on what happens with COVID, if they make a vaccine, if their drugs are useful, how their, you know, phase 3 trials go, and I'm not participating in any of that, okay? Again, someone asked about J&J. Love this company, love the stock, but guess what? It's dropped since they actually had this positive news on the FDA approval. So it's dropped since then, and this is reminiscent of PFE. So I'm waiting. This is another company I love. I'm waiting. Let it go below 156, I think. You know, if it can go below 156, come in and start scaling in slowly. Okay, another company that I love. I can't, say it anymore. These are some solid companies that you should consider taking advantage of slowly but surely. But remember, for the long term, these things don't always work out when you're trying to do, a few days swing trade, or even if, a couple weeks. It may take longer. All right. With that said, I think I have covered most of the questions that I want to. I will say that, you know what, if you want to have access to me directly, have access to my team, have access to my updates, insights, real time on what I'm buying, what I'm selling, and my thoughts, well, the elite membership is for you. There's going to be a description in the link, links in the description below. Check it out. You owe it to yourself to check it out. It's like $2 to try it out. No commitment. So please do that. If not, I again want to thank everyone for getting on here. One last question. Cannabis, there are actually two questions. PayPal and Square. So PayPal, I'm a bit hesitant on getting in at this level. A great company, is good for the long term, but a bit too high flying for me. I would look for a bigger pullback. On the other hand, Square is something that I have a position on right now. I really like the company, have liked it for quite some time, but this is a more speculative, more higher risk position that I have entered this past week. Okay, that's just my 2 cents. I do think it's a great business. I would just kind of make sure it finds a floor. Don't try and catch a falling knife on all these growth stocks, because if markets do continue to pummel, things like Square, things like Tesla, things like semiconductors, they will go lower and drop faster if markets continue to drop. Okay, cannabis stocks. Look, I mean, if you're looking at CGC, Tilray, or ACB, these things have just gone up crazy and now they're just pulling back. I think you have to have conviction in the sector. Many of these companies, even after a few years of having legalization, tailwinds, meaning it's positive for them, they still haven't been able to capitalize. They all lose money. Ultimately, I mean, it's not an industry that I'm interested in, but you have to make sure you do your due diligence on the individual companies, individual stocks. But I have no position in marijuana companies, and I probably won't. I don't really intend to have a position in them, because I feel like my money can be utilized in so many other different companies that are way better. Okay, we'll stop there. Again, thank you so much for the joining, for your insights, for your comments, for participating and for being on here. It's great to interact with all of you. I hope you've enjoyed it. Hope you've gotten value. Check out the previous video on my page on the 6 stocks that I bought. If you haven't, in large positions, check out the elite membership. Costs $2 to check it out. You're going to get an insane amount of value just in those $2. And if you choose to stay, that would be awesome. If you don't, no harm, no foul. Okay, it's fine. I understand. But it's a very tight-knit community. I make sure I keep the numbers small, and I rarely open it up to anyone and everyone. So just keep that in mind. You have an opportunity here, so I would take it. With that said, I appreciate all of you getting on. Big shout out to all the elite members, and of course, many of you that are from social media, Instagram, Twitter, all that. I absolutely appreciate you. It means a lot to me. I hope the transparency, the no bullshit perspective, and the reality that I bring to, not only my trades, my insights, but also what I post online is refreshing and helpful for you, because really I'm very fortunate to do what I love and be able to do it not having to do it. It's freedom when you choose to do something when you want to do it, when it's on your terms, right? You're not forced to do it. That's freedom. You do what you want as you want, right? So again, thank you everyone for being there with me, for your support. It's been an honor. Thank you so much. I appreciate it. Have a good Saturday night or Sunday morning, wherever you are, and we'll stay in touch. Again, if you have any questions, you can reach out to me via email. You can message me on Instagram. I do answer all messages unless they're trolling or just some garbage stuff that is not worth my time. But if you do message me, I do answer all messages. Okay? All right. Thanks a lot, guys. Take care. Ciao.